Prince Max from Liechtenstein with the chair of our board of the LGT Venture Philanthropy Foundation, Dr. Alexander Lieb, and Walter, one of our board members. Over the next hour, we plan to get their insights. We plan to listen to them, what they learned about their reflections of the last 5 years. And without further ado, I'd like to hand over to His Highness Prince Max from Liechtenstein, who is giving us his reflections about the last 5 years of LGT Venture Philanthropy.
Yes, hello everybody. This is my first webinar, and an interesting learning experience in itself. Reflecting on LGT Venture Philanthropy, I would say first of all that it has been a very exciting and rewarding journey so far over the last 5 years, and I would say the big surprise to me in a way is that we have actually been relatively successful in doing and pursuing what we have initially defined as our objective. It has been our objective to really put capital to invest capital with the objective to fight poverty, to increase the sustainable quality of life of less advantaged people, and to do that with a sort of private equity and venture capital approach. We really started purely with a concept and a sort of view on how we want to go about it 5 years ago, and I would say today we have a relatively sizable team. I think one of the key learnings for me has been that it has been actually easier than probably expected and anticipated to hire and recruit top quality people for this sort of effort with excellent backgrounds and prior experience. I think that has been very rewarding and has been sort of key to achieve what we have achieved today. I guess we sort of got lucky with our first hire, Wolfgang Hafmeier, who we have listened to before, who actually had the capability to identify and find many and attract many other quality people, and the observation is here in this sort of effort, similar to other efforts. Good people attract other good people, and so we are very glad to have built up a strong team. With regards to finding opportunities to invest capital that helps to reduce poverty, to increase the sustainable quality of life of less advantaged people. I would say deal sourcing has been initially probably more difficult, not surprisingly, and there have been differences between the different countries. In some countries, in some regions, we have been much more successful than in others. So I think that has been sort of an interesting learning and experience for us. What we have learned gladly is that our approach to really do a lot of due diligence upfront to apply a lot of the principles to due diligence and to essentially discussing, analyzing deals, applying the sort of private equity principle to that approach. That has worked very well. So this transfer from the private equity industry to this venture philanthropy industry in terms of many of the approaches we have found out works very, very well. I think it's clearly a key strength of our effort. I would say the same applies to then also the ongoing work with the organizations that we have supported. We have felt that it is very, very important to stay in close touch with our organizations, and we have sort of come up with this special ICATS program where we bring in professionals from our network and send them to the portfolio organizations to work there on a pro bono basis, where these professionals are being applied in functions, have an opportunity to work in functions in which the organizations that we invest have a real need. And having brought in these professionals, having selected them ourselves and having them working with our portfolio companies, we have found it to be extremely helpful. I think that was a great sort of experience for all of us. We have seen how it's very helpful for our portfolio organizations to get additional access to talent. We have seen how it increases our comfort in terms of building the relationships with the portfolio organizations. And lastly, we have actually seen a lot of the people that have joined these organizations, the ICATs as we call them internally, being very happy at what they're doing and being very enthusiastic about their experiences, and a number of them have actually stayed with the organizations and continued their engagement with them for a much longer time. Others have joined us as an organization. So I would say this sort of initiative had not been part of our plan when we started, but I would say it has been a real success story that has worked well for us. We have certainly learned a lot in terms of the sort of problems in the various regions where poverty is a much bigger problem than it is in our home countries. We have seen obviously deal flow related to these problems coming out of different pockets. Not surprisingly, agriculture is a big theme. Not surprisingly, education is a huge theme. Not surprisingly, waste management is a big theme. But I think generally we have learned a lot about the sort of problems which are the problems of disadvantaged people in emerging markets, and I think that has been for us a great learning experience, and being able to find organizations who help addressing these problems is obviously very rewarding. And we have seen that generally when you have good concepts, when you have good solutions, very similar to the sort of for-profit business world, one can also really scale and ramp up these organizations and in an efficient way, and that has been a lot of fun to see that working. I would say another learning has been that it is important to do your due diligence really, really well. Have reference checks done. Listen to the reference checks. We have one or two bad experiences where, with hindsight, we probably could have anticipated them a little bit better if we would have listened even more carefully to some of our doubts and also to some of the references that we got. But by and large, I think it has been a obviously surprisingly successful sort of venture, and we are now looking forward to taking a step back over the next couple of months to really consolidate our learnings and our experiences, and to and use that 5-year anniversary to review the sort of issues that we see, to refine our goals for the next 5 years, and to hopefully make sure that we can continue to become better at what we are doing, become even more efficient at fighting poverty, at increasing the quality of life of less advantaged people through working with great organizations and putting capital at work in a very efficient way. I think I've gone on for long enough. Pass the word back to Wolfgang.
Thanks a lot, Prince Max. Thanks a lot for your reflections. It might be interesting for the people out there to hear a word from you. The question that I wanted to ask Prince Max is, Prince Max, when you started this whole effort for yourself about 6-7 years back, when you started to think about creating something like LGT Venture Philanthropy, you had a personal motivation why you did this. And now looking back over the last years, do you think your expectations, your personal expectations, have been met, or did you think something completely different will be there after 6-7 years? What's that?
As I said, I think I'm super excited that we have come as far, and of course you cannot upfront visualize exactly how things will develop, but I think by and large we're not that far away from what we have initially embarked upon to build when Axel, who is the chairman of the board, and who at the time when we kind of like in the very, very early days thought about how we want to go about it, sat down and came up with this sort of very first strategic roadmap. And I think, as I said before, some things have been great positive surprises that we had not really included at all in our ideas, and but by and large I would say it has been a fantastic journey, and it is very exciting, and but it's not totally different from what we were going for.
Okay. Well, let me use this opportunity to thank you from the whole team, because I think it's been a fantastic journey for us as well, and we're well aware of the unique situation that we're in to be backed by a family like the princely family of Liechtenstein, and we're very well aware that it's quite unique that we've been allowed to do all the things that we have been allowed to do in the last 5 years. And as you said, we have a very passionate team, but this passionate team wants to say thank you as well, that you allow them to do what we do today, and hopefully we can do way more of this. And because we want to do things better each and every day that we do this, we're very curious also to hear from Mr. Fust, one of our early board members, what his learnings over the last 5 years have been, and where he sees challenges and maybe a few special things about LGT VP. Mr. Fust, what are your thoughts?
Thank you. Maybe I should, in order to be transparent, I should also quickly hint my background. I have a background in private industry, investment promotion, trade promotion, but I was also heading Switzerland's International Development Corporation, bilateral, multilateral, and also some activities in banking as such. I think the LGT was incredibly timely to set up this badly needed approach venture philanthropy is representing as an alternative for social and social impact investment. Badly needed because it became too easy for the world of the NGOs just to accumulate cost and to bear no entrepreneurial risk. And that led to not adequate ownership in a number of approaches. So I am firmly believing in the approach chosen by LGT Venture Philanthropy. But it also showed that there is no social entrepreneurship without risks. Good ideas do not automatically translate into good business cases. And charismatic individuals alone are not a guarantee for success, especially not those suffering from the helping or helper syndrome. There are so many excellently intended initiatives and well-educated people, but if in the long run they do not know how to do the business, those initiatives are all bound to die. Bringing social entrepreneur partners through a good diligent procedure is often more demanding than a normal investment cases. So the staff also of this venture philanthropy fund, they have to learn in both worlds, in the investment specialists, but also to see what is the social impact and what is at stake from that very focus of where the investment should take place. And I jump to what is very special, because the team LGT Venture Philanthropy has selected is absolutely incredible, because they do not only bring professional skill, they are highly devoted, highly motivated, and they bring along that sense for social investment badly needed in order to understand and situate the various partners. They have a unique opportunity, or seize the unique opportunity, by creating the ICAT system. Very often when you change an approach, you need to support capacity building, and especially management capacity building with your partners. So with the ICAT system, you have realized a triple win situation. You help the investor to be safer in his investment. You help the grant taker to have a better management, better toolbox also. And then you offer young people a unique learning opportunity. But the challenges are definitely that we have to walk the talk, and we have to win and keep confidence of the investors. And I am absolutely personally confident that this is going to be successfully realized also in the future. But it is also important to successfully manage a diversified portfolio, because the portfolio is highly customized. It's not just kind of standardized investment portfolio. And then the whole team is exposed. The LGT Venture Philanthropy will be even more practically challenged in the future, how best to manage the different expectations. The one from the potential grant taker, the one from the investors, and of course finally those who should benefit from those investments. So in short, LGT Venture Philanthropy has positioned itself, I would say, not only very visibly, but with a unique selling position due to its quality, due to its clearly setting priorities, and finally success. Results are there, and the results are impressive.
Thanks a lot, Mr. Fust. Speaking about results, what we sometimes tend to forget with all the processes and approaches is that our portfolio companies today serve 7.9 million less advantaged people, and I think that's the core of why we do all of this. And I think we've found, as Mr. Fust and Prince Max said, we found good ways to select excellent organizations out there with excellent social environmental solutions which really benefit these less advantaged people, which benefit them in a way that they can help themselves. And we should always think about these almost already 8 million people that we're able to support, and we're proud to support, I think, and we would want to find more in the future. Thanks a lot, Mr. Fust, for your insights. I'd like to give the word to Dr. Alexander Lieb, or as we call him, Axel. He's been with us from the very beginning, and he's currently chairman of the board, spent quite some time with us over the last 5 years, and has been a real supporter of our work, which we always appreciate very much. So Axel, we're all interested to hear what's been your learnings and your maybe challenges that you see for the future. Please.
Thank you, Wolfgang. Before I go into my learnings, I'd like to say how grateful I am that you just now said what you said, which is this is at least as much about impact and the people we reach and whose lives we can improve as it is about investing capital. And it's very important to say on such an occasion as a 5th anniversary that while sometimes we have very strong discussions around business models, around the metrics that we use to measure the success, etc., impact is very high in these metrics, and we do have to continue to look at that. When we started out 5 years ago, as Prince Mark said, we started with a concept in which we wanted to be smart money. We obviously knew that social entrepreneurs, so we find them will not only need money, but they also will need our connections, they will need management know-how. We knew that, but I think one of the learnings is really that probably management know-how is even more important than the other two, and network is probably second, and money is only third. As Sandeep Ahuja said about 6 hours ago in one of the earlier webinars, when you don't have proper accountancy, when you don't have proper HR policies, when you don't have a proper marketing strategy, then it's so hard, even with the greatest idea, and as I think you said, even you may be a charismatic entrepreneur, but it's very hard to grow your business and to scale your business and to bring your business into other regions, other countries, hopefully, like we've had the success with some of our portfolio companies. So that this other, the non-monetary help sometimes is more important. It's been one of my really key learnings here. I was also almost emotionally touched about the fact that when we started looking, we were just not sure whether we'd find the young people. I think you mentioned that before, Prince Max. Whether we'll find enough young people who have the right backgrounds, and we looked for backgrounds in consulting, venture capital, iBanking, people who can really do the maths of the business models we were looking at. And we were not sure whether we'd find people who at an early stage in their career, after 5, 8, 10 years of experience, would be willing to join us in this effort. And we've been overwhelmed how many good people we found. We found them for the team, we found them in the organizations and willing to join organizations, and we found them in the ICATS program, which was mentioned before.
I think in that context, it's interesting to remind ourselves of the timing. When we started, it was 2007.
Mm-hmm.
The financial crisis has hit. I think a lot of attitudes have changed since then. So I think that might have helped.
Yeah.
Might help a little bit.
Yeah. I think that has helped a little bit, even though sometimes when I discuss with the next generation, and when I say the next generation, is probably, you know, my eldest son is 24 and is working at a bank at the moment. And when I start discussing with him this change in attitude, then a lot of values have really changed comparing to our generation. When we left business school, we were, you know, social things were important because your family looked after them, and maybe you had a family charity or something, but our careers were really detached from that. Nowadays, that is not true anymore. People want to have impact from the very beginning and are willing indeed much earlier to leave their whatever careers in order to do something additional, meaningful in a very different field. And because I've said so much now about the backgrounds in venture capital and iBanking, I also want to touch on my third learning. Is I have not been getting tired in sometimes mentioning to Wolfgang and Oliver and the team and the rest of the board that some social entrepreneurs and enterprises are worthy a lot of our investment, even though unfortunately don't have a business model. And I was very glad that over the years we've been able here to give a lot of grants in addition to just capital investments in terms of loans or equity, because I believe that there are definitely things out there that we need to do, continuously need to do, in order to alleviate human suffering that unfortunately will never have any return, and not only not have return, but probably will lose half the capital or sometimes even the whole capital. We nevertheless need to look in our very strong due diligence way of looking at the organizations. I think this is not meaning we would give money or fonds perdus to organizations where we don't exactly know what they're doing with the money, but when we are sure that they have the right concept, that they have the right people in place, then I think money that is just a grant also sometimes is just the right thing to do. For the next 5 years, obviously, the challenges that we have is finding an ever-increasing number of strong, growing, young organizations that are scalable, which is typically what we're looking for. Given that we've started with a wide focus, which we knew from the beginning that the focus is very wide, 7 areas of focus and almost all continents. That is a broad scope, but we wanted to be so broad because at some point in time the plan was always to open from being just the princely family of Liechtenstein, having them as an investor and opening it also to other investors, and we wanted to be broad open so that other investors would be interested, who would be interested could find areas that they are interested in. It is still in that wide focus not easy to find the deal flow, and in some of the countries, in fact, we have gone to creating our own deal flow by supporting incubators and smaller initiatives that are below our normal investment line in order to grow the market for social enterprises, because when there is no market and there is no deal flow, but we see that there is the poverty and that there's the need for social enterprises, then obviously it is part of our know-how to then start creating the deal flow in those markets. And obviously the third challenge for the next years will be to grow our funds. As I said, we are open to other investors than the princely family at the moment, and we've had first successes in raising money, but we're trying to do that without over-promising. I am quite concerned that at the moment the marketplace is quite flooded with people who are going around promising returns, in the high teens of % returns, which I think in good organizations that can be possible, but it is very dangerous to promise that as an average return. And I would much rather raise the funds that we are raising without overpromising, and hopefully not be hit when the market finds out then that overpromising leads to a bubble, and that bubble at some point in time will burst. Wolfgang, the last question you asked me is what is special about working here? I think what's been very special in the last 5 years that we've been working together and together with the Princely family, even before in the description of the concept, was that work with an investor who is thinking in decades and not in quarters, maybe even in centuries. A family that has done charity and philanthropy in a very long time, and even when you have a downswing, even when you have maybe not reached some targets that we set, or when we had setbacks, the only question always was, what do we learn from that, and how do we go about it and go forward? That's been very special. And the other thing, and that's been mentioned I think by all three of us, I hope that we don't bore the audience, it's been very special to work with a team of world-class professionals who, in addition to being professionals, and you would find that, of course, in all professional service companies where we all come from, by the way, where great teams of people are working together. But here it's special that, in addition, you have this passion in the team for doing the right things for the people who are really needing it and who are really not able to fend for themselves. That's been just an outstanding additional experience to the professional service firm experience I had before.
Thanks a lot, Axel. Hearing you say that what you think is special is to not think in quarters but in decades, I think we got one very interesting question from the audience, and thanks a lot for all of you sending in so many questions. I will, over the next 20 minutes, pick a few of these questions, and we try to answer them. And if you should have more, I think please send them in. But one of the questions which came in was referring to this short-term, long-term thinking, and was along the lines of what are our thoughts regarding the next 5 years, and particularly in the short term, in view of the economic problems in the EU, but also the upcoming elections in America. And Axel, as you've mentioned this, what do you think, what are your thoughts around this topic?
Well, obviously we are aware of all of these things that come onto us in the short term. But when I think through what they really mean for us in terms of our strategy for the next 5 years, I think because they are indeed short-term problems that need to be overcome, they don't mean all that much for us. When I think about our portfolio organizations, they mostly operate in countries and environments in which the European currency and all the problems, and including the upcoming election, whether it's going to be the current president or Mr. Romney, don't play much of a role really. I think that comes back again to the fact that that the whole philosophy of LGT, the bank, and also LGT VP, to really think more, as I think Prince Philip once put it, as a marathon runner than as a sprinter. And if you see things in the long run, then such short-term problems don't really mean much. Of course, we are prepared that the short-term economic problems could lead to some co-investors getting into trouble, in which case some organizations may suddenly need to restructure their funding, in which case we are open for discussions. But so far, I would say, but I'm open also to what you think about that, I think because we are long-term thinking, short-term problems need to be addressed. We need to react to them. But I think neither for our portfolio organizations nor for us it would change a lot.
Yeah, and you know, the way I think about this sort of long-term, short-term, I think it's very important to have a long-term perspective and to really take into account the longer-term consequences of everything what we're doing. It's very important to have long-term sort of goals, but it's not sufficient. Of course, we need to deal with the short-term challenges. We need to deal with the short-term opportunities. We need to be also quite demanding in the short term and have clear short-term deadlines we need to live up to, and so on. What is very important with the sort of short-term deadlines and the short-term goals is that they're embedded in the right sort of long-term strategy, so that short-term progress is not translating in long-term setbacks. I think that's what has been a big problem in many parts of this world, and a lot of the problems that we're struggling with these days is because people have been thinking too short-term oriented without having the longer-term consequences of what they were doing in mind. We hopefully will not fall into this sort of pitfalls, but so we will always have to kind of like balance short-term issues with longer-term planning.
Yeah, I mean, just a very simple fact that our venture philanthropy approach applies private equity principles to this whole space means that we're engaged for the long term with organizations, which means if we say we're patient capital and are working with an organization for 5 to 10 years, then we have to have this long-term view. Still, we have to be very, very aware of the short-term issues that are around so that our portfolio organizations can create impact in the short and in the long term and do not go out of business. So I think, as Prince Max said, have a clear long-term view, embed your short-term activities in your long-term view. I think that's the way we think about these things. And obviously for us, it's not only the election in the US and what's happening in Europe, but it's in the different regions. We have to be aware of the political constellations around, and that's something we very explicitly do in all of our due diligence work, obviously. Another very interesting question, I think, which came from one of the listeners, and please don't be afraid if we don't go through all of the questions. We will send you this slideshow, as well as we will try to provide you with brief answers to your questions and send this afterwards. But one of the interesting questions which I think we might want to discuss here was how will LGT Venture Philanthropy differentiate itself from other players in the industry? I think we have heard a few things, but it doesn't hurt to maybe repeat a few things or be more explicit about a few things which differentiate ourselves in the market. Mr. Fuß, would you want to give a first answer to this question?
Yeah, I firmly think that it will be quality, reliability, trust, and professionalism. And you are a trendsetter and a path setter at the same time. You have proven a track record in relatively short term, in short period of time. I know a number of new funds coming up, but they do not have the capacities. They have the capacity to manage the fund, but not to do the investment activities. I also think you have followed and LGT VP is bound and is knowledgeable to go for innovative approaches and not just go the ways already done. And you have the capacity for that, you have the network for that, you have the spirit for that, and you benefit from those young ICATs building a whole network of support. And in time of, sorry to say so, low performance in some investment areas, venture philanthropy performance can compete with performance of other funds. So there might be more and more people saying, look, with low performance in certain funds, why do I not go for high social impact investment when I have similarly rate of returns on investment, and at the same time I contribute to the well-being of a substantially higher number of people. I also think that you have the potential to manage funds of others, and that will position you strategically very well, and I hope that venture philanthropy of LGT will respond to those upcoming opportunities.
Can I add here a little bit? You know, what differentiates us from my point of view from others is that we have really focused on the emerging markets mainly, and in a very broad way. Africa, Latin America, Southeast Asia, India, China. I think that's an unusual focus that is clearly differentiating. The second thing is coming back a little bit to what Fuss said. I would just probably phrase it a little bit differently. A huge focus on the investment management side of things, being very, very tough on due diligence, being extremely diligent upfront before actually commit to an organization, and really bringing the sort of private equity approach to selecting and working with organizations forward. I would say that that is another sort of key differentiating factor, and in combination with that, trying to be very careful the way we employ capital to make sure that it's being used so that it has that impact in an efficient way, and really helps the disadvantaged people the most effective way possible. So I think we have been very passionate about that. So thirdly, I would say we are actually a pretty young team. I think that probably differentiates us in many ways as well. Fuss is clearly helping us a little bit in bringing more seniority to our efforts, but overall we are pretty young, and I don't think we have regretted that much, because I think we get a lot of passion out of it. It's all a balancing act, but I think it is very, very tough to sort of do the due diligence in these extreme parts of the world, and you need a lot of passion that I think we have found in our team. So I think those three factors, the geographical focus on emerging markets, but in a very broad way, the real high focus on investment side and private equity sort of approach, and the young team are three key factors. What I would like to add that over the next couple of years, I think we should try to become famous for a couple of other things. I think we need, I mean, we have been extremely broad in terms of the sort of transactions that we looked at. We've pretty much looked at everything because we were new, and we felt that it isn't particularly helpful to be too narrow at the beginning. I think we've learned quite a bit over the last couple of years, and we have seen areas where we can be more skilled and more efficient than others. So it might make sense going forward, and we're having a strategy session only about 3 or 4 months, but certainly one of the theses which I will put forward is that we should probably focus a little bit more and really become expert in a number of areas that are of particular interest. And probably after 10 years, we will hopefully recognize which these are. So I don't think we have decided yet, and I want to go more into detail here.
Thanks a lot. I think the good thing is that we're already 5 years older than when we started, so we already feel pretty old in a sense when you compare it to the experience that most of the funds have, which are just starting in this impact investing. I think when you see the accumulated experience of the team, of most of our 23 team members who were with us for the last 4 or 5 years, it's quite significant even for a comparatively young team, what we have accumulated in terms of experience out there. But
and I think, sorry to interrupt you, Wolfgang, but I think also the fact that, just building on everything that's been said here, because obviously I agree with these differentiating factors that my 2 colleagues have mentioned, but building on it, the fact that this team is out there in the regions is decentral. They're sitting
we keep forgetting
in the market. For us, this is so normal because it was like that from the beginning that we keep forgetting that is a huge differentiator. Whether you do venture philanthropy from Geneva or you do it from Zurich with 95% of the team out in the field with local knowledge because they lived all their lives in India and Southeast Asia and Africa or wherever they are, that makes a huge difference. And I think that is a differentiator we need to not keep forgetting. Sorry, but I interrupted you, Wolfgang. You were saying something different.
No problem at all. I just wanted to hand over if you have additional points which you think differentiate us, or do you think the most important ones have been mentioned?
I think the most important ones have been mentioned. Maybe a differentiator, again, mentioning the family of Prince Liechtenstein, is that this is an entrepreneurial family that decided long time ago, hundreds of years ago, that they wanted to take responsibility when it came to charity, philanthropy, or whatever these new words are around something that is very normal to a family like that, to take care of their people. When it comes now to questions about how do we differentiate, that means that the long-term thinking that we heard much about, that the normality in dealing with an investment like the one in LGT VP, in a way that you say, yes, of course you need to have a return on the things where you can have a return, but you also can give grants where grants are necessary. The normality of dealing with this investment like an entrepreneur does, with a long-term view, is a differentiator because, as I said before, some co-investors who are depending on yearly funding indeed may have difficulties getting that yearly funding when returns are receding as they do at the moment. But we have the feeling that we're supported by a family that really takes very clearly on that responsibility and has always done that to help the disadvantaged.
Maybe I can add 2 points which we always also take for granted, that having a look at our competitors, especially the social venture fund or the impact funds which are out there, something which is not normal at all is the fact that we started by investing our own money, meaning that Prince Max from the beginning was very much involved, and that it's the money of the family which was invested at the beginning and only based on a strong track record with our own money, which gives us, I think, some credibility. We started to work for other people, and working for other people, I think, in the way we do it, in this customized way, where we don't push for certain products, but where we sit together with clients and develop very individual profiles with them in our advisory, and then based on this do very customized solutions for them, is also something which is not existing out there, basically. And we got extremely positive feedback because, yes, there is people out there who like waste management a lot, but that's not true for everyone. And it's true as well that there's people out there who like education, but there's others want to focus on environmental topics, and we've received quite positive feedback in regards to this fact. As time is running very fast, I'd just like to have one last question for today, and I'm not expecting very long answers, because as we've just heard from Prince Max, we're going to define our next 5 years more precisely over the next couple of months. I still would want to ask the question, what do you think we will see over the next 5 years? Will we do more of the same? Will we do different things? What are your expectations?
Well, if you want a very quick answer, let me try a quick answer, even though it's a very broad question. More of the same or new things, I think both. We probably will see exponential growth in portfolio size, in impact, and obviously therefore also in team. We will see deep expertise in probably fewer focus areas, and I think we will product-wise see that we will have, like we have now a global fund, we will have probably regional funds funded not only by the Princely Liechtenstein but also by regional investors who will invest in us and give us their money to invest into social enterprises. And in parallel, I think we will also do still customized solutions for investors who like one special area especially, and therefore want, you know, water deals across the world or waste management deals across the world. Now that's a quick and dirty one. Was that enough? Is there more to add?
Well, you know, my view is, in broad terms, it's not going to be totally different. But we want to get better. I think that's the objective over the next 5 years, and in, you know, where we will shift activities and how, I think is now probably a little bit premature to say, but I firmly believe that you know, each organization that wants to be successful over time needs to sort of adapt and change and learn from its mistakes and learn from the problems that it experiences, and we will work hard on that side to to continue this journey, which has been very pleasant and great and rewarding. So we're looking forward for you know, all the support for everybody who has listened into here. So thank you very much for your attention.
I think in the future we will see more clouding. You have, on one hand, more competitors arising, more funds arising, but they will need partners to successfully invest and implement in social impact investment, because this is more difficult than just kind of channeling funds. And there I could imagine that LGT would become a cloud leader. I very much hope so.
Thanks a lot to all of you. Thanks a lot for your insights. Thanks a lot for all of you to listen. I think we had a tremendous first 5 years where we enjoyed, as we said, learning to be better at what we do each and every day. We enjoyed getting better at helping more and more less advantaged people. And we will continue to learn each and every day and get better at what we do. If you'd like to listen to the 2 other webinars that we'll have today, there is one at 3:30 and there is one at 5:30. Please go to our website and you'll find the link to get linked in, so to say. Thanks a lot to all of you. Wishing you all the best and hope to stay in contact. All the best. Bye-bye.